welcome everybody in the audience for our second earnings call for the Q2 highlight session. I also welcome my colleague Günther Spitzer, who attends the meeting and who will give you some more information on the financials. Just a few remarks. When we come to the Q&A session, I kindly ask you to present yourself with the name and your company, and we do it orally and not in the written form. That I would highly appreciate that. And Mr. Sennewald would moderate at the end the Q&A session, which we do after the presentation. Yeah, I would like to start now with a short company description, or in brief, who we are, who is not knowing Nabaltec so well. We are a medium-sized company in the chemical industry and one of the leading suppliers for environmental flame retardant friendly fillers and specialty aluminas based on our pre-materials aluminum hydroxide and aluminum oxide. We are headquartered in Schwandorf in Bavaria. In addition to our main manufacturing site in Schwandorf, we have two production sites in the USA, in Tennessee, Chattanooga in Tennessee, and Corpus Christi, the Nabaltec plant, and the first one is Nabaltec. As well, we have a distribution center in China. In the 2024 financials year, the group generated a revenue of 203.6 million euros, and operating result turned out to be 22.3 million. With around 500 employees worldwide, which is also reflected in our export ratio of 76.6%. Our sales departments are supported by many distribution partners around the world to supply our customers. We have been operating Schwandorf since 1973 and currently have a group worldwide production capacity of approximately 65,000 tons, as depending a little bit on the product mix. Sorry, that was this foley. I was coming to the product segments now. Here you see our two product segments, the functional fillers and specialty aluminas, with the corresponding areas and product properties, as well as respective capacities. I mentioned 265,000 tons already. The growth driver, of course, for Nabaltec is primarily, as you can see by the revenue, the functional fillers product segment, namely with our horse player, the fine precipitated hydroxides for the cable and wire industry, as well as boehmites and visco-optimized hydroxides for the application primarily in the car industry, electromobility with lithium-ion batteries. In the specialty alumina segment, which counts for about 1/3 of our revenue, we have further developments in the refractory industry, and this part, due to the weaker industry momentarily, shows sideways move in the demand, especially driven by the weaker refractory industry, which is linked to the steel. If you go one further, if you look now a little bit in detail into our segments where we are diversified and where the applications are, you can see on this page that the examples for all our applications, the biggest revenue generator is definitely wire and cable, the wire and cable industry in 2024. What is behind wire and cable? Majorly the data communication and energy cables, which are for us momentarily the most important growth driver and in this tough market environment. In the battery market segment, which counts 15%, and is special link to our boehmites and visco-optimized hydroxides, we have a differentiated picture here, where the demand for boehmites remains extremely low. The sales volumes of our visco-optimized hydroxides continue steadily to rise. If you look at the segment specialty aluminas, it's also a very diversified application field. Our major applications are definitely with 41% share the refractory industry, as well as the technical markets. With a large number of applications of all these products, we concentrate, of course, here more in the European region, where with the functional fillers we are worldwide active. In 2024, as I said, the total revenue fell from 46% in the previous year to 41%, which is the consequence of the weak steel market lagging far behind the consumption to the previous years, especially in Europe. The share in the technical ceramics in the opposite rose from 36% to 39% in 2024. This market is majorly driven by investment goods and has a little bit of a different setup, which is not so highly cyclically compared to the refractory market. Coming to the next slide here, more the financials, the highlight for Q2 2025. Revenues in the second quarter amounted to euro 51.8 million. Of course, a significant decline of 4.7% compared to the previous year's figure. The average sales price instead increased by 2% due to we had selective price increases and changes in the product mix that helped us and offset the 6.6% decline in sales volumes compared to the same quarter of the previous year. The EBIT margin as a percentage of the total performance, as you can see, was 9.3 in the second quarter after a bit better margin of 10.4 in the year before. What was the reason for this decline was certainly the weak demand for the specialty aluminas, which gave the margins or made the margins a bit under pressure, and as well, of course, our higher value-added product boehmite, and this caused a negative impact on the overall EBIT margin in comparison to the second quarter of 2024. Despite this lower revenue of 2.9 million in the second quarter compared to the first quarter 2025, EBIT margin improved by 7.5% to 9.3% in Q2. What was the reason? Majorly lower costs of energy, particularly gas and electricity, which came down quite substantially compared to Q1, had a positive impact on the one side in the second quarter in comparison to first quarter. Earnings per share amounted so consequently at 0.35 euros compared to 0.46 in the second quarter of 2024. The net debt as of date of 30/2025 was 90.5 million. Majorly were offset by cash and cash equivalents of 90.9 million for the reporting date of June 30. This brings the group net debt to minus 0.4 million, excluding, I must mention here, the fixed term deposit of 15 million euros. Now, if you look at the different segments, how did they perform in Q2? We start here with the functional fillers. As you can see, the revenues in the functional fillers product segment decreased also slightly by 3.5% in the second quarter compared to the previous year's quarter. Sales volume here declined 5.5%, while prices in the product mix could be increased by 2.1%. As I mentioned before, our good operating or generating cash unit was the fine precipitated hydrates, which were a stabilizing factor due to the quite strong demand in the cable and wire market, and of course the increasing revenue growth with visco-optimized hydroxides, especially here for the battery application of 0.9 million euros in the second quarter 2025. These were, of course, stabilizing the sales performance. Boehmite various showed a significant decline in sales, with sales falling almost by 52% compared to the same quarter of the previous year. Here we see still no impetus from the market, and the competition, especially in China, is pretty high. At 4.6 million euro, the operating EBIT in the functional fillers product segment is with 0.6 million euros, remains in the double-digit number in this segment at 12.1% in the second quarter, which still shows the strong performance of this unit. The product areas, fine precipitated hydroxides and visco-optimized hydroxides, are continuing to be the main driver, as I mentioned, of the double-digit EBIT margin development in this segment in the second quarter. The slightly improvement in the EBIT margin compared to the first quarter is also due to lower energy prices for electricity and gas, which helped us to bring that up. Due to the persistently weak demand for boehmites, the product area was unable to make a positive contribution to EBIT, I must mention here specifically. Strong competition, as I mentioned, combined with low market prices for ground hydroxides at our subsidiary Nabaltec in the USA is still the main reason for the lack of a positive result as well. I mentioned that, but we try hard to work on the turnaround. A short word on the capex, on the capital expenditures here in the segment. These amounted for 4.9 million in the second quarter. Investments in the capacity expansion, majorly for the boehmite and visco-optimized hydroxides, continue to be the main projects. We will finish our boehmite investment probably by end of this year, now in the next 3-4 months. And for the visco-optimized, the commissioning is now scheduled for second half of 2026. Now let's move on to the specialty aluminas here. The second quarter at a negative or a decline of the revenue of 7.9%. The specialty alumina product segment remained below last year's revenue, and the sales volume here specifically decreased by 9.3% compared to the same quarter of the previous year. Due to the improved products mix, the average price we could increase by 1.5% in the second quarter, which is certainly a bit positive. But as I mentioned, there is still a lack of impetus here, especially from these products in the segment, due to a lower demand in the refractory or steel industry, or this is linked to the steel industry. After 2 quarters of loss, a slightly positive EBIT was achieved again in the reporting quarter. So you can see that we had this turnaround made feasible. Improvement in raw material and energy prices were one of the reasons for the EBIT improvement in the second quarter compared to the first quarter in 2025. Compared to the same quarter last year, EBIT declined still by 0.6 million. This was driven majorly by higher energy costs for gas. Gas was extremely expensive in 2025, coupled with weak market demand, and this caused the reason for the poor EBIT performance. On the other hand, we fight with strong competition, with overcapacities, and this showed a negative impact on sales as well as selling prices. If you look at the capex here, it was quite moderate and amounted to 0.6 million in the second quarter 2025. The largest part is definitely relates or dedicated to the general overhauling of the two rotary kilns. One is already overhauled now. We start with the second kiln, which will be finished then by end of 2025. Now I would hand over to my colleague Günther Spitzer, who will explain the financials, the profit loss, balance sheet, and cash flow. Günther, please.
Yes, thank you, Johannes. Let's continue with the profit and loss statement of the group for the first half of 2025. Our revenues in the first 6 months of 2025 decreased by 1.7% to 106.5 million compared to the previous year. Due to weak sales in the second quarter, negative currency effects, and increased market uncertainty, we revised our sales forecast for fiscal year 2025 downward on July 24. More on this when we come to the outlook slide. Sales volumes declined by 1.5%, and the average selling price was almost at the same level as the previous year. Total performance decreased by 3.5% to 106 million. While finished goods inventories increased by 0.9 million in the same period of the previous year, they decreased by 1.1 million in the current year. This is mainly due to the overhaul of the furnaces in the oxides product area. Despite the lower performance, gross profit improved slightly to 55.6 million and gross profit margin to 52.4%. An improved product mix and declining raw material costs are the main reasons for the improved gross margin compared to the same period last year. In addition, gross profit improved due to other operating income of 1.8 million euros, of which 1 million was attributable to currency gains. In the same period of the previous year, other operating income amounted to 1.3 million. EBITDA decreased by 2.3 million year-on-year to 14.6 million, which corresponds to an EBITDA margin of 13.7% after 15.4% in the first half of 2024. An increase in personnel costs of 0.5 million and higher other operating expenses of 2.1 million are the reasons for the decline in EBITDA. Other operating expenses include currency losses of 2 million in the first half of 2025, compared to 0.5 million in the same period of the previous year. Depreciation ratio fell from 5.5% to 5.4% of total operating performance. Accordingly, the EBIT margin amounted to 8.4% in the first 6 months of 2025 compared to 9.9% in the year before. Functional fillers continue with a double-digit EBIT margin of 11.7% in the first 6 months. Specialty aluminas recorded a negative EBIT margin of minus 1.1% after 3.9% in the first half of the year 2024. Earnings per share amounted to 67 euro cents. Now I come to the balance sheet at the end of the first half of 2025. Total assets increased by 7 million to 305.3 million compared to the end of 2024. This was primarily due to an increase in cash and cash equivalents of 4.4 million. Property, plant and equipment increased by 1.9% to 142.7 million, including assets under construction of 42.4 million euros, reflecting the extensive investment program. Other non-current assets decreased by 15.1 million due to the reclassification of fixed-term deposits of 15 million to other current assets. Inventories decreased by 3.8 million to 44.1 million. This is mainly the result of the reduction in raw materials by 2.6 and finished goods by 1.1 million. Compared to the end of 2024, cash increased from 86.5 to 90.9 million at the end of June 2025. On the liability side, equity amounted to 153.4 million, a small increase of 0.1%. The equity ratio fell slightly to 50.2% due to the increase in total assets. Non-current liabilities of 124.5 million include provisions for pensions of 31.6 million and bank liabilities of 90 million. The average interest rate for bank liabilities was 2.6% in the first 6 months of 2025. Current liabilities increased by 8.1 million and include higher trade payables of 6.6 million compared to the end of 2024. A brief look at the cash flow statement. Cash flow from operating activity of 20.5 million decreased by 3.6 million compared to the previous year. In addition to the decline in the net operating income of 2 million, changes in working capital also had a negative impact compared to the first 6 months of 2024. After deducting payments for investments of 11 million, free cash flow amounted to 9.5 million euros. The cash flow from financing activity of minus 3.3 million includes a dividend payment of 2.6 million. Cash amounted to 90.9 million euros at the end of June 2025. So far from my side. For the next slide, the outlook for 2025, I will give the word back to Johannes.
Yeah, thanks, Günther, for the detailed information on our financials. I would now give you a brief outlook on what is expected for the short term, as far as it's really possible due to this crazy world we are momentarily in. I would say the demand continues still to be characterized from short-termism and a high volatility. Especially the continued demand, weak demand for products in refractory industry and e-mobility will impact our 2025 revenues. Following weak sales in the second quarter, combined with this adverse, also now the currency effects on the dollar and increased market uncertainty due to this crazy world of US trade policy, we have decided to revise our sales forecast for 2025 financials year downwards. We now expect a sales decline of up to 2% compared to the previous year. Originally, we had forecasted, anticipated actually a growth of 3 to 5%. On the earnings side, we maintain our previous forecast and continue to expect the EBIT margin to be in the range of 7 to 9%. This is a good news. The lower EBIT margin in comparison to 2024 considers already higher gas prices due to the fact that our long-term gas price, as you might be aware, has expired last year, and also due to the uncertainty of energy prices for gas and electricity, which mainly will be purchased from Nabaltec in the spot market momentarily. I know it's not a very satisfying outlook momentarily for all of us, and we would be happy to see a better visibility nowadays. But with the news from America and the signals, it remains very, very suspenseful. At that, we are at the end of our brief inside view of the Q2 highlights. I would now hand over to Philip for the Q&A session and open the board now for the audience. Feel free to ask us any questions. Philip, please.
Yeah, perfect. Thank you, Johannes. Yeah, as stated in the beginning, questions will only be accepted via the audio line. To ask a question, I would ask you to use the raise your hand button. And with that, we already have the first hand raised by Christian Santer. Christian, you can unmute yourself now.
Hi, good morning, everyone. I would have a big picture question for several years now. And on the other hand, the gap filler has been growing for some time. So how would you expect this to look like? So in terms of, growth going forward in a few years?
Good. To give you a little bit of an inside view also for the audience who don't know what's really behind the driving force, the gap fillers is majorly something in the battery, which is placed to get the thermal heat out, to get the thermal heat of lithium-ion batteries under control. I must say I was on the Stuttgart Battery Show, which is a worldwide big show for batteries, lithium-ion or e-mobility, and I was very impressed how many exhibitors are and jumping on this platform of thermal management, which has an increasing demand in the previous years. In terms of growth rates, it's hard to say now. As you might recall, we are investing now, and I said in my speech that we have targeted now commissioning next year, second half of the year, our big plant where we have 30,000 tons of capacity. These products will help the thermal management. It is an extreme cost-efficient media or product for the industry, which helps to get the thermal heat out of the battery. Especially, it's applied into the adhesives, and I've seen it in the battery show. For example, Henkel showed a very special adhesive where all the cells are put onto the socket of the battery, and this adhesives needs to be thermal, has to have a thermal flow. What was extremely innovative, I think, and this is no secret here, that Henkel invented, for example, a glue, which you put a certain voltage on it, and then this glue releases from the socket. And why is this such a big innovation? Where we are also a product in, so that's extremely good news. That for recycling processes for life cycleability, because momentarily, if cells in a battery case are broken, you have a problem to get them out. It's very hard to get the hard glue out, and you practically destroy part of the cells. And with this innovation, you circumference this problem. And I think this will be a big run in the future. And you see all these people who invent on these thermal adhesives are just now looking for cost-efficient materials, where we are one of the major players. As I said, we were one of the front runners here, so first movers, and this gives us a certain advantage also over competition. The advantage versus boehmite, I mentioned this several times. With boehmite, we had to go into China. In China, manufacture there, so we were highly dependent on Chinese manufacturing. The adhesives are all manufactured in Europe. So we have a shorter supply chain. We directly go into the adhesive manufacturer with our product, and then from there they go to the OEM. In the boehmite field, we are just one leg behind. So we sell to the separator manufacturer. The separator manufacturer has to sell their goods into the lithium-ion cell manufacturer, and from there it goes to the OEM. So here we have 3 steps to come to the OEM with the thermal products or the visco optimized, we have only two partners. That means adhesive and then directly into the OEM, because Mercedes, Volkswagen, they buy directly from the adhesives manufacturers the goods and then apply it to assemble the battery. That's the positive news. We have a stronger setting, and as I said, it grows, gains momentum and importance to be applied for these batteries, and that's why we see a big growth momentum in the next years, much stronger than in the boehmite especially, and that helps us a little bit to also offset the lack of impetus on the boehmite side. But of course, overall, it's not satisfying that the boehmite is not performing so well, but it gives us still a strong stance in the battery in e-mobility as an additive supplier.
Yeah, and then I have two more questions. So first one is a bit shorter. Have you had any inbounds or RFQs that are related to the infrastructure bill? This is one, and then one that's not really related. I'm putting it together anyway. The material cost ratio in second quarter was pretty low compared to the recent quarters. How would you expect this to progress going forward?
First question, impetus from now infrastructure programs. I mean, the only thing, but it's not directly related to infrastructure, is certainly the artificial intelligence, where the server centers are built up. But this is a little bit independent of the infrastructure program. If we link it more, then I would say in construction, for example, we have not seen yet a strong impetus. I'm positive that this will come, also linked to the steel industry. Once more is built again, that the steel industry is pushed a little bit. But my expectation is you will see this within the next 12, 13 months, probably then. 26 ongoing, there might be the first signs that certain programs, the budgeting increase by the government of Germany will impact slightly, but this needs to be all now put into the pipeline. The problem in Germany as well is always the money is there, who brings all the performance on the road? Simply. The second question, in terms of raw materials, margins, I would say we had an exceptional situation in Q2. I do not. In the first quarter, we had a fairly. Oh, Günther, you want to?
Yes. I can say something to the material ratio here. In the second quarter, we had, as Johannes said, very low energy costs, especially for gas and electricity. Compared to the first quarter, we saw 1.2 million lower energy costs. The energy costs in the third quarter are higher than in the second quarter, but not so high as in the first quarter. And so we expect for the second half material ratio a little bit higher than in the second quarter, but lower than in the first quarter.
Question answered.
Thanks. That's basically answered. Thank you.
Thank you, Chris. Thank you, Christian. And the next question comes from Harry Kilby. Harry, you can unmute yourself now.
Hi, so I'm Harry Kilby from Edison. First one was, have you seen any sort of indication from the upside from data centers are going to potentially have on the wiring product, and when do you potentially expect that to start materially coming through? And then as a second one, how do you see your US revenue as a percentage of the total revenue kind of developing over the next couple of years?
A good question, Harry, for the AI centers, data centers. I think this will gain momentum in the next also 1 to 2 years. I mean, if I am not mistaken, I think Amazon and also Microsoft announced, or was it a multi-billion-dollar investment for Germany? But this is now in the stage to be developed and also to be built. But this will take a while. On the other hand, what we have now seen and heard from the market, also in US, a lot of data centers will be built up. And one information I want to bring up, I was amazed, is they call it, I don't know what the proper name is, but the multi-data centers, which are huge in dimensions. And the salespeople who are in the cable and wire also linked, they said that in such a monster, let me say monster KI center or AI centers, data centers, 10,000 kilometers of wire will be linked. I could not even imagine how much. 10,000 kilometers, that's horrendous. And this will definitely push the market. But Harry, if you say right now, it's still in the phase of ramping up. I would say that this can kick in around the globe, also in Europe as well as in the United States, by the next 12, 15, and 24 months. But there will be definitely a move forward, and the standards of flame retardancy and toxicity plays in Nabaltec's product's hands, definitely. That's what we can say momentarily.
Amazing. Thank you.
It's the second question was, help me again.
Percentage of your US revenue as a percentage of the total. Kind of how do you see that developing in the next couple of years?
I would say in context what I just told you, we definitely will see, as you know, we have still room to move, especially also in Texas, where we have the fine hydrants, which are dedicated majorly for cable and wire. I hope and I'm optimistic that the next 2 years we have still 6,000-7,000 tons. If I translate that in revenue, could be around 7, 8, 9 million euros to move on, which we can increase here, especially dedicated to the cable and wire. It's a little bit different for the Nabaltec business, because the Nabaltec business is not is more linked to other electronic goods, but we will have to watch that carefully. Momentarily, the US also fights within the country with the crazy tariffs and unpredictability on what happens, because a lot of things, frankly speaking, harms a lot of supply chains in the US with tariffs coming from abroad. But yes, there will be definitely an increase in volume and revenue, especially linked to Nashtec the next couple of years. I'm optimistic for that. But how quickly it goes, it's really hard to say. That depends, but a little bit on the move. But you have to remember we are 2 suppliers momentarily in the US, which produce domestically, Huber and us, and so there is of course limited access, and we have the backbone of Nabaltec outside from US. Of course, the good thing is from Nabaltec into the US we have no taxes, no tariffs, so we have the backbone here in case there is an overload now. If I don't want to be too optimistic, that we can also take the advantage from the Nabaltec side, as well as, of course, domestically from Nashtec. The currency is a different question, that is a little bit the bad side momentarily, that the weak dollar pushes a little bit on our top line compared to last year, of course.
Amazing. Thank you very much.
Thank you, Harry, for your question. And the next question comes from Konstantin Wichert. Konstantin, you can unmute yourself now.
Yes, hi. Thanks for taking my questions as well. Maybe if I could add another sort of question on the data center related US topic. Maybe first, could you just remind us again of the rough share of your sales that you have with the high voltage and medium voltage cables versus low voltage and optic cables? And then maybe help us understand whether the premium we've seen on US copper prices versus London copper prices had a negative effect on volumes in the US, and whether you expect that to improve volumes in the second half of the year where this has apparently disappeared, or whether that might have actually led to some pre-buying and therefore could rather end up in a destocking in the second half. That would be my first question.
So in terms of the split, what is optic, high, middle, and low voltage? It's really hard to say, because you have to be aware that our biggest clients are compounders. So these compounders sell compound to the cable and wire industry, and they do not disclose or might even not know if this compound goes into a high or low voltage or medium voltage. It's very, very hard to say. So I frankly can give you no split. I would wish to do that. I urge my salespeople always, but it's very hard to find a clear figure momentarily. We see what we see. You mentioned optic cables. Optic fiber cables are the number one for data centers because of the high speed. Because they lose over certain lengths the power or the capability to transport a lot of data. So optic cables are the first choice, where we are also in. But a percentage of revenue or translated revenue into Nashtec is momentarily really hard to sell. The differences due to the tariffs now we have momentarily seen no effects really on the Nashtec or Nabaltec sides, that people anticipate or do a stocking due to favorite prices on the other side or a lag. It's pretty stable momentarily, but I can really not momentarily exclude that any turbulences with these tariffs would disturb the supply chains. Like you say, it could be slightly possible. It will be discussed that American cable manufacturers resource and more from Europe or other sources, because it's cheaper even due to taxes, to tariffs, than to buy it in the United States due to this craziness also on the copper side. Because, of course, copper is one of the major drivers and conductors still in cable and wire. But with fiber optics, it's a little bit different. So one has to really differentiate that. But momentarily, I cannot give you a clear answer to that question. In the moment, we don't see that yet. It could look different if you ask me in 2 months or 3 months. I might have more visibility on that.
All right. Thanks for that color so far. And then maybe again, some more thoughts on the boehmite market. And I think two elements that are interesting to me are whether what you hear from the European separator film producers, whether you have a high likelihood of also getting a higher share with the European players, or whether they indicate that they are still trying to import volumes from maybe the Chinese competition. And then maybe if they have spoken with you in terms of timeline when they expect to start ramping up this production that has been partly or mostly postponed last year, I believe. Some color on that would be great. And then maybe also, if we just look at the Chinese market and the battery growth there, it seems that probably 2 or 3 years down the line, there would be the requirement for further capacity if Estone, for example, would think to kind of solely supply the Chinese market. So do you think, or have you spoken to Estone or seen anything that they are actually planning the next capacity expansion, which could sort of undermine generating sufficient margins for a longer time period? Or do you think that they are really trying to still come back to reasonable utilization rates and are not thinking about another capacity expansion currently?
That would be all speculation if we cover the topic stone first. I have to wait till they release their figures, which should be any day now, their Q2 figures, because they always said in August. I have not heard anything from my salespeople, but they normally reflect it pretty quick. So I have to wait what's written in there. Normally they are very covered up with what the capacity utilization rate is. From our glance, momentarily they are at least to the first quarter, they were heavily underutilized. I cannot see, even with the higher demand, that they will increase their capacity. Even 2 years ago, they were like practically had their new plant island, only utilized their first plant capacity. To our knowledge, is around 60,000 tons there. But I cannot tell you. My assumption at that time was, but recall is 2 years ago, was that at that time they sold about 20,000 tons. And the CEO and partly owner was highly nervous about the development, because there is also competition. Stone seems, of course, one of the biggest in terms of volume, but there is high competition. What we saw in China, the prices came down substantially by even 30-40%. That's where we just did selectively supply, like opportunistic supply, but not only on the boehmite side, price side. We saw this depression. We see it also on the separator folies, on the separator sheeting. A lot of people practically took out capacities, idled even production sites in China, and they suffer highly. Like SKI, one of our bigger customers in China, had to take out simply capacities to just avoid more losses. If you come to Europe, and what I can see now, coming back to Nabaltec's field, momentarily we see a slight improvement compared to the last months and previous months. A little bit. That is probably the overall uptake in the electromobility. If I come to the European sheet manufacturers, they struggle as well. They cannot give us a clear visibility where it goes. They try to optimize, to improve their capacities. There are, and you must know, there are two Korean people, sheeting manufacturing people, companies in Poland, and there's a few one Chinese in Hungary. We are supplying them, but with a different push. And the problem is that they are lacking really momentary contracts from the cell manufacturers. They are in the same boat because cheap cells are imported from China, and there is no cell manufacturing in Europe, practically a few small ones. So it will take a while. They optimize, I don't know. They probably sell. A big hope I know from SKI, they were signalizing they tried to put a lot into the US instead of building a plant there. That was they put that project on hold, and now say we first optimize out of Europe and go into United States, because bringing back the sheets into China is practically imagination. It's not working because of the pricing. So there is still a lack of usage. We still hope that a few projects in the pipeline for selling is coming up, and that the market will pick up in the next year. I also am absolutely positive that there will be a consolidation of the market in China. There will a lot of cell manufacturers, smaller ones, will drop out. Also, sheet manufacturers will drop out. And then, of course, it depends. The strongest and fittest survive. Then there will be certainly also a pickup again. But it's an unsatisfactory picture, I must say, momentarily, and we have to cope with it. We try to optimize. We also try to optimize our production capacities, and I mentioned that we dedicate the plant which we have now installed, the capacity extra for boehmite. We will reroute that into fine hydrates where we have a higher need, and we'll optimize our volumes in boehmite, so we are not falling too much behind. We have the flexibility, and we will use that consequently to mitigate costs, which then start, of course, with a higher depreciation. And I'm very happy that I have this flexibility momentarily, and I'm not just having one plant or one production for 20 million dedicated solely on one product. I think this is a little bit that's a weak argument, but better than you just have here idle capacity. But still, we have to be a bit patient. I'm still convinced that electromobility will be one of the good choices, and you see that a lot of car manufacturers consequently move on. And as in all hype markets, there will be a consolidation, a cleaning up of market, and then from there it goes in a regular way. I think this is a normal cycle in a just new market, and we're in the middle of it, and we have to cope with it. I cannot say anything positive, but I'm good and I'm optimistic that Nabaltec is in a good position to maneuver us in such troubled waters and heavy times as we might as well, in a good way.
Thank you so much for that thorough answer. Thank you.
Thank you very much, Konstantin, for your questions. And with that, we have no further raised hands in the queue. And I would conclude the Q&A session also with that and hand back the word to you, Mr. Heckmann, for some final remarks.
Yeah, thank you, Philip. Thank you, Günther. I thank the audience for participating in this earnings call. I hope we could answer most of the questions. Our next conference will be then in Munich again. So for the ones who have one-on-ones, we will be present in person. Otherwise, I wish now everybody still a good week, who's in vacation, a good vacation still, even they participate in the call, and we will lately listen or hear you in the next call in Q3 then, which was always already at the end, and hopefully we have then a better understanding how the outlook will be also for the next 12 months. Thank you very much again for your attention, and I wish you a good afternoon and a good weekend. Goodbye.